Bitcoin is losing momentum. Is this a cause for concern or an opportunity? Hey guys, it's Keith Allen. And as you can see, as you're probably aware, anyways, you can't see it because I'm not showing you the chart, but as you're probably aware, Bitcoin running into some serious resistance and having a rejection from the 50-day moving average. We're going to climb into the charts and look at that and so much more here. But first, a little bit of housekeeping. I'm not a financial advisor. I don't provide financial advice of any kind. Nothing I say or share should be considered trading or investment advice. Trading is risky. Do your own research. Never risk more than you can afford to lose. Let's start out on the candle chart and take a look at how things are developing here over the past 24 hours. We had yesterday a bit of a push to the upside and unfortunately ran into strong resistance. And I showed you yesterday that we had strong resistance at the 21-day and 50-day moving averages. And yesterday, we actually got that retest up to the 50-day moving average. There was a rejection. Price fell back down below the 21 and just in the past few minutes has just reclaimed this 21-day moving average. But as you can see, resistance still pretty strong here. I want to show you now really kind of what I woke up to that alerted me to the fact that this was probably going to happen. And that was a shift in liquidity in fire charts. And liquidity seems to be moving around a little bit right now, a little gaming going on perhaps as we see things develop through the day here. Let's widen out just a little bit so you can have a different perspective here. You know, you can see we had a really nice ladder here from 60K down to the 50K level here just a couple of days ago. Yesterday, some of that started to fade. And in the last 24 hours, even more of it has faded a little bit from this range. I've been saying for a long time, trying to illustrate to you guys what we need to see in order to take this out. There's a lot of ask liquidity here. And you know, the good part for bulls is that we don't have at the moment a deep concentration all at one level, like up here where we had 73 million and up here we had 93 million. Those obviously send price the other way. We need to see the bright spot, you know, like we did down here, 100 million and another 100 million, you know, 106 million below. We need to see heavy concentrations of bids to send price up through this cluster of ask liquidity over the 69K level. So as we zoom in a little bit, you can see that some of this fading out a little bit here. Actually, some of it is actually floating up higher, which is inherently bullish, right? It means that these guys are chasing price a little bit. But you see this here, and let me introduce some contrast here that might make it easier to see this. Here to the lower side, where a ladder of or a portion of a ladder of bids was removed. Now, again, some of this may have come up higher. And that is inherently bullish in the fact that they're chasing price a little bit. What is not good is that the strength of support in this level, the concentrated support that we're looking for, is softening a little bit here because obviously, you know, this liquidity is moving. Now, whether the liquidity moves up, whether it turns into market orders, or whether it gets rugged altogether, the impact when it's all said and done is the same. And that impact is we've softened support here at these higher concentrated levels. Now, this could be very bullish if we saw more liquidity coming in or bigger concentrations. If these clusters here at 65K and at 62K, if these were yellow or white, brighter colors equal more volume, right? So until that happens, these little clusters here, this is 10 million bucks. It's not enough to push price over and through this massive amount of upside resistance. Okay. So that's kind of the liquidity side of things. Now, overall, I like the fact that some of this liquidity is moving up. I also like the fact that the ETF flows are for the second day positive after yesterday, and I think BlackRock is actually one day away from setting a record, or at least moving into the top 10 of overall consecutive days for ETF inflows. So that's important and interesting. Yesterday we talked about this a little bit. I think this is an interesting metric, right? The grayscale outflows. Grayscale has been selling since since the ETFs were released, um, but we are seeing what appears to be a downtrend in their volume. So these are outflows. These are all net outflows, but they do seem to be trending down. So maybe that's tapering off a little bit. And once that happens, then we will see an increase in demand. We also should see an increase in demand coming from Hong Kong, as those were recently approved, and we can expect a second wave, maybe even a third wave of demand coming from U.S. based institutions who are going through the due diligence process and have not yet onboarded ETFs for their customers, and they would, of course, onboard products offered by these entities here. So that's kind of the macro overview to me after the halving. The macro outlook is still as bullish as it's ever been. But that doesn't mean that we can't still range here for quite some time, right? Anybody who expected a straight shot up just hasn't been paying attention, right? Not going to happen. So I wonder if this is going to hold here, right? These breakdowns, just like we saw at the 69K level, um, this series of continued breakdowns, attempts to break out, but wicks below are a sign that those breakout attempts are very strong, right? And we saw the breakdown. And again, we had another attempt. We broke out, but wick below, wick below, wick below, or wick right to it. These just were not signs of strength. And then, of course, we saw another breakdown, and it's on repeat. So this is a very strong technical level, and then the liquidity above it between that 2021 high at 69K and the new all-time high, and actually up to and through 75K. There's just a massive amount of ask liquidity stacked here, a massive amount of shorts up here that are at risk of getting liquidated. And I would say that a short is a risky proposition. If we're ranging here, if you're short from up here and we're ranging here, um, as long as this 59K level holds, this is my invalidation here, right? This was the lower. This is now the last remaining lower low. We had a series of higher lows. This was the first. This was the second. This was the third. This one got taken out, obviously, when we had this dip here. This was at the beginning of the moment, I think, that Iran launched all those drones at Israel, and obviously that spooked the market. We saw a breakdown here, and then a recovery. This retest, obviously, this annihilated this low, and it annihilated this low, but this lowest low, the local low, if you will, which on this exchange is around 59,300, might be different based on the exchange you're on, but somewhere in that ballpark. Um, this has been defended so far, so that's a positive sign, and that's why we've seen this recovery here. But as you can see, not a lot of strength in this move. Trend precognition showing some weakness here as well. This is a tentative signal, but the momentum, the downward momentum, is still active. This is a real time indicator. This A1 slope line, this orange slope line here, is a real time indicator, and what it's saying is there's not a lot of bullish momentum here. In fact, the momentum is actually on the bearish side here. So even though we have a move, had a move up, it's not a strong move, and as you can see, it's fighting to hold support here at this 21-day moving average. Not a lot of confidence in it holding unless we see bids move into place here, right? So let's come into a narrower time frame and see what's immediately below us. We do have some buying into this liquidity, which is good to see, but we don't have a lot just below us. Now, this series of asks, set, pulled, and reset again. There's a little bit of gaming going on here. So you always need to be mindful of these things. But there's also, from up above, ask liquidity dropping down into the range. And that is, that will suppress price a little bit. So the fact that we don't have anything really strong here holding things up at the moment, makes me question whether that 21-day moving average will hold. And as you can see, whales have been selling since since we got toppy yesterday above 67K. And, they're buying dips and they're selling the rips. So this range could stay active for quite some time, seeing larger amounts of bid liquidity come in above. Actually, that one looked like it moved up. So this is interesting right here. Let me see what this looks like on the weekly really quick. Excuse me. Okay, so you see that this area here at 60K is softening a little bit, right? We had at one point 20 million, and it softened just a few million, right? Have come out of that. Well, this was at 4.5, and then it went up. So a few $1,000,000 from down here moved up there. So this is now front running a little bit of the support down here with a new increased block size of bids at this 62K level. And again, here you can see moving up ever so slightly. So be mindful of the fact that there is a little bit of price chasing going on here, but um, the fact that it's down low, uh, they just want to get filled down here or possibly herd price up. If they were real eager to get filled, they'd be placing this up here in this 66K range and higher. So that's not what they're looking for. They're looking to improve on their position with a bid at the bottom of the range, which is a logical approach. Buying up here, you're buying near the top. So just have that in mind. You're at least buying near the local top. So if you think that price over time is going to go up much higher, and that's a reasonable expectation after the halving, then maybe you're not so concerned. If you're trading or you're just you're looking to scalp or you're looking to improve your cost basis, your average entry price on your current position, then you want to be looking for opportunities near the lower end of the range. Right now, we're obviously near the upper end of the range, and we have very strong resistance overhead. I would be very, how should I say, calculated and cautious about your button pushing at this point, right? Know what your invalidations are. For me, it is this 59K level. If we lose this, then it's a reasonable expectation that we would go retest support here. Actually, test it for the first time. It hasn't been tested at all, right? And that's a big reason to expect that to happen. This is the $50,000 to $52,000 range. So that's a reasonable expectation if price loses this level of support at 59K. Hope that gives you some insight, at least gives you a clue of to what I'm looking at, and helps you navigate this volatility a little bit. I think it's a good idea to expect volatility to continue and to expect price to stay in this range until we start seeing more bids move up above the 60K to push us back up to the 65K range and then above the 69K range. And it's going to take some work. These straight lines are not sustainable, at least not for very long typically. So expect this to take a little bit of work to get through this 50-day moving average. Then we have to hold it. Then we've got to take out this 69K level, which has been a difficult challenge so far. And once we do that, then I would look for consolidation above this 69K level without any wicks below, right? As long as we're seeing it wick down, then that's a sign that it's not a super strong move. Once we establish an RS flip here at 69K, which again has yet to happen, we're at the moment trying to validate an RS flip here at 59. So, and if this holds, then that would be validated, right? If we get this breakout above here, then that's validated. So we need to clear the 69K, and then we can work at this level and go for new all-time highs. And then do we get the opportunity to really start discovering new price levels once we break back into this channel here. That's going to do it for me for the moment, guys. Hope that helps you out. Hope that gives you some insight as to what I'm looking at and helps you maybe gain some perspective as you try and navigate through the market here in the coming days and weeks. Going to wrap it with that And if anything super significant happens, I will try and keep you guys updated a little bit later on today. I hope you appreciate the content. If you do, please smash all the buttons and by all means, share a comment. I love your comments. I read each and every one of them. I engage with each and every one of them. And they're not only a good motivation for me, they help me grow the channel. And I really do appreciate that as well. Oh, looks like I got one here real quick. Let me see. Um, Hey, Kirat, nice to have you here. Appreciate you following along. And hey, you can find more on, of course, my personal channel at on X at KA Productions, and of course at MI_algos for material indicators. If you're interested in any of the products I'm showing, like fire charts, you can find a link at the bottom of the description on YouTube. Hey, real quick, also, it has come to my attention that those of you who are having trouble with the language barrier, sorry, I'm an English speaker. If you wait for the YouTube video to populate, so I'm streaming these on YouTube and on a couple different X channels. The YouTube video does do some live transcripting, so it takes a little time for that to process. Once it processes, and it takes like an hour or so. Once it processes, you can actually hit the closed captioning button on YouTube and translate that transcript into the language of your choice. I believe that works. So hope that helps you guys out. And again, I appreciate all the support. We'll do it again later. Have a great day. And as always, trade safe, my friends.